Debt is the root of all evil. Have you ever heard this phrase? To a certain extent, indeed, you should never get into debt because doing so is a form of enslavement.
And the money became debt. And so then these communist school teachers tell you to get out of debt.
Hey everyone, welcome back to the channel. Today we're going to explore a topic that might surprise you: how rich people make money with debt. Many believe that going into debt can enslave you, burying you under a mountain of financial obligations. And it's true, to a certain extent. When mismanaged, the debt can take over your life. But here's the catch. While debt can be a burden, rich people often use it to their advantage. They use debt to make even more money. So how do they do it? Let's dive into 5 ways wealthy individuals and organizations turn debt into a tool for profit. Number 1, borrowing to build business. Most of the world's trade relies on debt. It may sound strange because we're often told borrowing money for a business is risky. But in some industries, debt is not only useful, it's necessary. Let's say you want to start selling something simple like pens. There's always demand for pens, right? But instead of spending your own money up front, you can use a different approach. Many manufacturers, especially in China, are willing to lend you their products before you pay for them. Factories in China produce massive amounts of goods, from electronics to everyday items like pens. They're so confident in their production that many will supply you with their products on credit, allowing you to sell them first before paying the factory back. Of course, this requires trust and establishing a business relationship, but once you do, you can sell those pens and pay the factory after you've made your profit. Here's why this works so well. You don't have to risk your own money up front. Instead, you borrow the product, sell it, and keep the difference as profit. This method has been in use for decades, and it allows businesses to operate without tying up large amounts of capital. All you need is the ability to sell, and selling is a crucial skill that will serve you well in business. Number 2, refinancing in real estate. Next, let's talk about how wealthy people use refinancing in real estate to make money. Real estate debt, in particular, is filled with loopholes that can benefit you financially. Did you know that having a mortgage can actually save you money on taxes? Wealthy people take out multiple mortgages to take advantage of tax breaks because every dollar saved in taxes is like an extra dollar earned. Here's an example of how this works. Imagine you bought a home a few years ago for $300,000. Over time, the market value has increased and now it's worth $400,000. You still owe $200,000 on the mortgage, so you've built up $200,000 in equity. Now, instead of just sitting on that equity, you decide to do a cash-out refinance. This allows you to take out a new mortgage for 80% of the home's current value, which is $320,000. After paying off the original $200,000 mortgage, you pocket the remaining $120,000 in cash. With that $120,000, you use it as a down payment on another property, let's say a rental. Now, not only are you gaining rental income, but both properties are appreciating in value. Over time, this strategy helps you grow your real estate portfolio without using your own cash savings, and the wealth just keeps building from there. Number 3, hedge funds and short selling. Hedge funds are another way the rich use debt to their advantage, and they often employ strategies that aren't accessible to the average investor. Hedge funds are designed to make the wealthy even wealthier. While most people try to invest in businesses they think will grow, hedge funds frequently do the opposite. They make money when companies fail. Let's say a hedge fund manager believes that Facebook's stock is going to drop. Why? Maybe Apple announced new privacy changes that will hurt Facebook's ad business. The hedge fund borrows Facebook shares, sells them at the current price, and plans to buy them back at a lower price in the future. If a stock falls, they make a profit. However, if the stock price goes up, the fund faces unlimited losses because it still owes the borrowed shares. This tactic, known as short selling, involves borrowing assets, just like in our previous examples, and then making money from their decline in value. It's risky, but highly profitable when executed correctly. Number 4, forex trading and leverage. The foreign exchange market, or forex, is where currencies are traded, and it's another place where debt plays a major role in making money. Forex trading is essential for global trade. Let's say a US company needs to pay employees in China. They'll need to buy Chinese yuan. As currencies fluctuate in value, forex traders can profit by predicting those changes. Here's where debt comes in. Forex allows you to use leverage. This means for every dollar you trade, you can borrow up to $100. So, with just $1,000, you can control $100,000 worth of currency. A small change in the exchange rate can lead to big profits because of the leverage. Of course, this is also risky. If the trade goes against you, the losses can be equally large. But for those who know the market, leveraging debt in forex can turn small investments into substantial returns. Number 5, building credit and using it wisely. Finally, rich people know how to use credit to their advantage. In today's world, credit is a powerful tool that opens up numerous financial opportunities. But to benefit from credit, you need to build and maintain a good credit score. A good credit score allows you to borrow money at lower interest rates, whether for business, personal expenses, or real estate investments. Successful businesses often use credit to finance purchases or invest in growth opportunities. The better your credit score, the lower the cost of borrowing, which directly improves profitability. The key is to manage debt wisely by making sure you can handle the repayments. By showing banks that you're a reliable borrower, you not only get better loan terms, but you also open the door to more borrowing in the future. And remember, banks are willing to lend because they earn money on the interest. In some cases, even if a bank runs low on cash for loans, they can create new loans, because debt is the fuel that drives economies forward. Whether it's borrowing to start a business, leveraging real estate, making smart investments through hedge funds, trading currencies, or using credit to access lower-cost capital, debt can be a powerful tool when used wisely. It's not about avoiding debt entirely, it's about understanding how to make it work for you. One's life is ended when they are buried under a mountain of debt. Even though you were making an effort to pay off your obligations, they are not waiting for you. Rather, they are increasing daily because no one loans money against their own free will. There is never a drop in interest. However, despite all of this, the United States has decided to take on debt. Almost $15 trillion is the total amount of consumer debt in the United States, which means that the average household debt is more than $5,300. Although the gross domestic product of the United States is little more than $21 trillion, the entire economy is comprised of debt. The majority of the trade is contingent on debt. It may sound contentious because taking out a loan to launch a business is a terrible idea, and I assure you that I would never do that. However, there are some firms, particularly conventional businesses, in which the utilization of debt is the most advantageous choice. Let's imagine you're interested in vending pens. There is a constant demand for this commodity, even though it is extremely prevalent. If all went according to plan, you would fly to China and look for a facility that manufactures that kind of pen at a price that is reasonable and of high quality. Purchasing a container of pens, transporting them to the United States, and then distributing them to your customers would be your plan. Nevertheless, in the modern era, this is primarily accomplished through the use of websites such as Alibaba, unless it is a more difficult product that requires you to travel to the factory. You don't need to pay for products to have the product first. I'll explain how it works. China has become the factory of the globe over the previous half-century, manufacturing everything with its factories. Continuously, thousands of factories are working to manufacture everything that the world needs. The majority of these factories would gladly lend you their items in exchange for payment at some point in the future to make it simpler for you to sell them through their products. It's not about avoiding debt entirely, it's about understanding how to make it work for you. If you found this video helpful, make sure to give it a thumbs up and subscribe to the channel for more insights on money, investing, and financial strategies. Leave a comment below with your thoughts. Do you think debt is good or bad? I'd love to hear your perspective. Thanks for watching, and I'll see you in the next video.